Well, the other day, Cern Basher and I did a video that you can look at it. Maybe we'll put a card up at the end. We talked about a lot of aspects of the earnings call, but we ran out of time. There just wasn't enough time to get it all in because I know that we should be able to count on you guys looking at a 2-hour video, but so far I just haven't been willing to risk it. I mean, with Cern Basher and I know that this would be something you'd like to spend 2 hours with us, but I'm not. Are you? Do you think we should risk that yet, Cern? I don't know.
I think we should do the Lex Friedman approach and just go for a 3 or 4 hour video.
Why not? What the heck? Huh?
I've got
I
plenty of
listen,
charts, Randy.
I listen to those and to All In podcasts. An hour and a half is normal for them, but
Yeah.
I don't know. I think we're definitely as good as those guys. Anyway, CERN, you've got more for us today. What direction are you going to take us in today?
Multiple directions. I think I've got some very interesting things. I think we kind of set the stage with our last video, and now we're getting into some really interesting stuff.
Okay.
So
The
without
other
further
stuff,
ado,
the other stuff wasn't as interesting.
well, it was very interesting, but this is more interesting. Interestinger.
Oh, the
Yeah.
disclaimer. There it is. Okay.
Yeah. So again, I've got to put that up again. And I hate to start the slide deck this way with this next slide, but we just have to cover this.
All right. Okay.
Okay, so your friend and mine, Gary Black, wrote this. He said, I've argued previously that the Austin robotaxi launch in June is likely to be a non-event, given the asymmetry of risks involved and the inability to extend the test to other markets. On the earnings call, we heard that there will only be 10 to 20 robotaxis in Austin to start. This isn't really a test market, it's an experiment. Okay. And that seemed to upset somebody on X. And Gary got this response from this guy named Randy Kirk. Randy, you might know him.
I don't know.
Randy says, I don't agree with any sentence in that statement. Randy, could you be more specific about what you don't agree with?
Every single thing he said.
Yeah,
Apparently, you had a lot to say about it as well.
I did. But Elon said specifically that they would increase units as demand increases and that the ramp would be the fastest ramp ever. Right. And then Mayor Thacker said, Elon said is not a good strategy for forming a thesis. And so that kind of, forced me to respond. And I said, nice cherry picking of what Elon said. Right. So yeah, it's 10 to 20 cars. Fine. That's where they're starting. Right. But Elon also said this, and I'll just read this just to make sure we get this.
Okay.
We expect to be selling fully autonomous rides in June in Austin, as we've been saying now for several months. So that's continued. But the real question from a financial standpoint is, when does it really become material and affect the bottom line of the company and start to be a fundamental part of the business? When does it move the financial needle in a significant way? And he says that's probably around the middle of next year, second half of next year. And then once it does move the needle in a significant way, it will really go exponentially from there. So Gary's chosen to ignore all that,
Right.
right? And again, like Meredith said, Elon said isn't a good strategy, but you got to balance out, the good with the bad here in terms of what Elon said, right?
So Gary Black clapped back later and said that you can't spreadsheet. He didn't say it that way, but you can't put it on the spreadsheet what you don't know. So you don't know how fast it's going to go to other cities. You don't know how fast it's going to get to, a million or millions of vehicles, which is what Elon also said would be true by the end of next year. What I was complaining about really was the beginning of his statement, because Elon also said that they would start putting more cars into service as the demand required, which is the obvious thing to do.
Yeah.
So they aren't limiting it to 10 to 20. They're putting 10 to 20 out there because they think that's probably what the demand will be initially. But I believe that they're going to have their ear to the ground. They're going to know who's coming up on the apps. All that information is going to be on AI, be analyzed by AI. And if they need 100 cars or 500 cars or 1,000 cars, it isn't hard at all for Tesla to put out a lot more cars as fast as necessary.
So that's interesting, right? Because we've been talking about, everybody's talking about going to Austin in June.
Right.
So the demand's going to be for way more than 10 to 20 vehicles,
Yes.
right? So, that part of it is interesting in terms of, they misjudging the demand because basically everybody that I've talked to wants to go to Austin in June,
Right.
right? We're going to be waiting for hours to get a ride in a robotaxi, right?
Yeah.
Um, so that's kind of interesting, but yeah, I mean, a slow phased rollout is fine. I think demand is not a problem. I think Gary lacks a little bit of imagination because everything that goes into a spreadsheet ultimately is a guess,
Hmm.
right? Yes, okay, if you have a company like Apple selling iPhones, then you can make a reasonable guess that the business model this quarter is going to be the same as the last quarter, and you can make incremental changes,
Hmm.
right? And that's fine. He's waiting for that, and that's fine. He can wait for that until it hits him in the face, right? But robotaxi is coming. This is not an experiment.
Right.
Right? Um,
I mean,
there's issues about how quickly it will ramp.
yeah.
Absolutely.
Yeah, it either works or it doesn't in June. I mean,
Yeah.
that's something Elon's been saying for a very long time. You either believe this is going to be a thing or you don't. So they
Right.
believe it's going to work in June. Therefore, I believe it's going to work in June. If
Yeah.
it works in June and there's no real significant hiccups in terms of infrastructure or the way the app works or the way the consumers perceive it or whatever else, if there's no significant hiccups, then I don't know what keeps it from ramping other than regulation.
Right. And again, based on today, if this is airing tomorrow or yesterday, there seems to be an effort afoot to streamline the regulation,
Right, right, right.
which is, I think, one of the biggest issues that we've talked about in terms of the regulatory approval process. And
Yeah,
if
I
the
mean,
US government can streamline that, then that takes a huge hurdle out of the way.
and again, as I've pointed out over and over again, it's not also just about robotaxi, but also about just unsupervised driving. Hopefully, the regulations
Yeah.
will be covering both, because
Right.
once the car is unsupervised, I think that's just going to be a massive uptick in consumer sales.
That's right, and that's a very important point, right? The growth of robotaxi, if they're constrained by the number of vehicles they put in the fleet, and they will be for a while, that could be the growth actually that we may see is in the unsupervised side of FSD. And
Mhm.
the demand, as you said, the demand for those vehicles, once people see that they can sleep in their vehicle while it's driving down the road, that will cause a huge uptick in demand.
Right.
Yeah,
And not only the uptick in demand in terms of boy, I want one of those, but also the uptick in demand that we've been talking about for so long, which is people who want their own fleet when the Airbnb version becomes available.
that's right. Yeah. So exciting days ahead. Maybe the initial rollout in Austin is kind of, slow and muted and not the big party everybody was hoping for. That's fine. It's more important to get this right.
Mhm.
Um, so yeah, but it's not an experiment at this
Well,
point.
and then from a stock standpoint, this is the other element. From a stock standpoint, we've got all these different things. The normal things are working. So there's already FOMO about this. There has been for 6 years, there's been
Yeah.
FOMO about this robotaxi opportunity. So the FOMO between now and June can only increase. Could there then be a sell on the news in June? Of course it could. If the FOMO is really out there, if we're sitting at 488 or 500 or 510 or something, it's certainly possible that we would pull back as this thing rolls out on the news. But if it works and there's no big hiccups, then that's when I would anticipate seeing that like next level of FOMO coming in.
Yep. Now it's going to be interesting. All
Yep,
right.
it's going off. Here we go.
Let's shift gears.
All right. Oh yeah. We don't have gears.
Well, sorry.
Yeah.
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 Let's change vehicles.
Okay.
Um, Tesla's 10Q. It's like
Oh,
a all-you-can-eat buffet for me when I get these
I
reports.
betcha.
So this time around, I took a look at Tesla's property, plant, and equipment disclosure.
Wow.
Okay. And basically, this is all the things that they've spent money on that have a useful life that they have to depreciate.
Right.
And in the top left of this image is kind of their rough guidance around the depreciation. So when they buy machinery, equipment, vehicles, and office furniture, that may last 3 to 15 years, depending on the item.
Okay.
Right. The tooling that they do for the factory, 4 to 7 years. Buildings and building improvements, 15 to 30 years.
Hmm.
Computer equipment and software, 3 to 6 years. And AI infrastructure, 5 to 30 years.
Mm.
Okay. So just keep that in mind.
Okay.
So this is the total property, plant, and equipment before depreciation that they've spent. And this is kind of the balance. So at the end of December 2023,
Okay.
they had spent about $40 billion.
Got it. Okay.
Okay, let's work up from the bottom here. The bottom one is machinery, equipment, and vehicles. So basically the machinery in a factory,
Hmm.
right? And equipment in a factory.
Yep. Yep.
Okay. Land and buildings, that's pretty obvious, right? You build a gigafactory, you buy the land, you build
Right.
the building.
Right.
Okay. AI infrastructure. So as of December 2023, they'd spent 1.5 billion on AI infrastructure back then.
Hmm.
Okay, we'll cover that story in more detail in a second. Then you've got tooling. So the different things that go into a factory to make it, make a production line,
Sure.
etc. About 3.1 billion. Leasehold improvements. So for buildings that they don't own, right, the investments they're making in those properties. All right, that's another 3 billion.
Okay.
Computer equipment, 2.4 billion. And then this category here called construction in progress.
Mm.
Think about this as a bucket. So when you're building something, it shows up in this bucket. And then when it's complete, it will appear in one of these other areas.
Mm-hmm.
So this gets drained down and it flows into one of these other buckets.
Okay.
Okay. So they say here that well, we'll see this in a second in terms of how this flows, but you can see over time that number has gone from 5.7 billion as high as 8, and currently we're at 7.3 billion.
Okay.
Now, the thing that really jumps out at you on this page, if you're looking hard enough, is the green section, the AI infrastructure, has gone from 1.5 billion to 5.4 billion
Mm-hmm. Mm-hmm.
in 5 quarters.
Right. Right.
Okay. Now they're investing in all the other areas as well. And here's the numbers, maybe a little easier to see. Right. So the machinery, equipment, and vehicles has gone from 16.3 billion now to 18.8 billion.
Mm-hmm.
Right. They're investing there.
Mm-hmm.
Land and buildings, 9.5 billion to almost 11. As I mentioned, AI infrastructure, 1.5 billion to 5.4.
Right.
Okay. Tooling, 1.3 billion to 4.4 billion. This is a company that's making investments across the board, but the largest increase has been in the AI infrastructure area.
Right. Right.
Okay. So they've gone from investing 42 billion now to almost 54,
Mm.
and you can see what the depreciation has been. So there's a net balance of about 37 billion of
Mm-hmm.
investment.
Mm-hmm. Mm-hmm.
Okay. Depreciation is largely an accounting charge. It doesn't necessarily mean that those assets are not useful if they're fully depreciated, but they try to get that right to the extent that they can.
And the opposite is true too. Sometimes the equipment, machinery, buildings, et cetera, won't be worth anything close to what
Yeah.
it is on the balance sheet if you're at a fire sale.
Yeah. Yeah. And hopefully we're not looking at this
Right.
list to say, okay, what can we sell to raise money? Hopefully that's not the issue.
Right.
The purpose of this analysis is just to kind of look at the direction of Tesla's investments.
Mm-hmm. Mm-hmm.
Okay. And so we'll go to another visual here. This is taking a look at the quarterly changes.
Mm.
So, for example, we saw the construction in progress from one quarter to the next, in this case, from December 2023 to March 2024, this value in that bucket grew by 143 billion.
Yeah.
So 143 million. And then there's an $840 million increase. Sorry, I'm getting millions and billions confused.
Yeah.
It's really
Yeah.
easy
Yeah.
to do.
Yeah. Yeah.
Just 3 extra zeros, Randy. That's the only difference.
I know.
842 million increase in that bucket, right? So you can see here that they're making an investment. They're building out, something, right? Whether it's factories, whether it's AI infrastructure.
Right.
Now, here's a really interesting one. So September of 2024 from here to December, the construction in progress dropped by 1.2 billion.
Hmm.
So what they were building is now finished,
Right.
and now it gets put into other buckets. And so the biggest increase was the AI infrastructure, $1.4 billion increase. So it's safe to say that most of this was probably AI infrastructure that was completed in that fourth quarter.
Right.
Well, that was Cortex, right?
Right.
Now, the Shanghai mega factory was also completed, so some of that could be there too.
Hmm.
Okay. Um, Although the land and buildings component doesn't really show up here. It's earlier where that shows up. So I'm guessing that most of this was AI infrastructure that was completed in the fourth quarter.
Right.
And of course, the third quarter was a big investment there too. Okay. Now, this last quarter, the investment in AI infrastructure was pretty small.
Hmm.
And I think we'll see bigger investments in that area in probably Q3 and Q4, just like we did last year.
Sure.
Okay. But the one interesting thing that I noticed for this quarter was tooling. $544 million increase in tooling.
Hmm.
When do you spend money on that? Well, when you're bringing up a new production line,
Sure.
right? So whether it's Cybercab or whether it's more affordable vehicles, et cetera, that's the money's being spent there. So it's kind of interesting to look at these components. It's hard to see for sure what's going on, but just these general buckets give us a pretty good idea, where Tesla's spending their money. Um, and there's a massive, massive investment in the AI infrastructure. They're putting a lot of money there.
All right. And here's where Brian Wang again has broken news that nobody's paying any attention to. I haven't seen anybody else talk about this. It never occurred to me to think about it. Why is Elon putting this much money into that Cortex? Why do we need another 100,000 GPUs or whatever it's going to be in this new building? What is going on? And we could sit here and go, okay, well, we need that in order for Optimus to be able to do what Optimus is going to do. We need it for the robotaxis to be able to do what they're going to do. We need the inference. We need the compute. We need all this, happening, and we need that kind of compute in order to accomplish this. And Brian is like, he doesn't think that explains it. That what we will have when all this is said and done is going to be by far, it already have and will continue to have, by far the largest supercomputer in the world that is designed for real world training. Nobody's going to be close. And so what does that mean? Well, they brought it up in the conference call and they said, oh, well, there's going to be other products besides Robotaxi and Optimus. There's going to be some other moving objects that work in the real world. And so we're going to, and that might, you and I talked about it on the part one of this program, where it could be drones, it could be forklifts, it could be heavy equipment, it could be other kind of warehousing equipment, it could be tractors. I've done some studies on tractors. There's a massive opportunity for tractors worldwide. In many countries, they have almost no tractors at all. These people could be going from no tractors to autonomous tractors in one fell swoop. So these are just some of the possibilities that could be coming out of this Cortex facility that's being built right now.
Yeah, I would push back on that a little bit. So I think Brian is very right long term. I don't necessarily think Cortex 2 has anything to do with those items, because if Tesla's going to make the product, then they're going to have to, build the factory and build the capacity first, or in conjunction with that. Now, I suppose they could be building a drone factory, and we don't know about that yet. That's entirely possible. But Jensen Huang has said that anything that moves ultimately will be autonomous.
Right.
And so I think that's correct. That's a correct way to think about it. And so, yes, ultimately, I think Brian is right on that view. But I recall Elon talking about the compute needs to train Optimus.
Hmm.
And he's saying that something like, 10,000 times more, more complicated, but maybe we don't need 10,000 times or 1,000 times as much compute. We might need 100 times as much compute
Hmm.
to
Hmm.
train Optimus. So I think the compute is going to be largely spoken for by Optimus training and probably more. And it wouldn't surprise me to see that this AI infrastructure number continue to grow over the years and become a much larger piece of Tesla's total CapEx spending.
Right.
Um, but yeah, I mean, I think ultimately, Randy, I think you're right, and Brian's right that everything is going to be autonomous.
Hmm. Hmm.
How much of that stuff Tesla actually makes remains to be seen. I don't
Or just licensed.
necessarily,
Yeah.
yeah, I don't think Tesla's going to get in the tractor making business, but they don't need to.
Right.
Yeah,
Yeah.
yeah. So yeah, so that was interesting. And relating to that is, Randy, if you and I were kids in a schoolyard in the future, we might say this. Oh yeah, well my AI is smarter than your AI.
So that just allows us to go off on another tangent, and maybe we can keep this one a little shorter. But somebody, I can't remember which program I was watching the other day, was recommending that every child, maybe even preschooler, will get an AI tutor. And
Yeah.
now that AI has a memory, that tutor will just travel with them throughout their entire school career, and we'll know them. We'll know them backwards, forwards, and inside out. We'll know them better than they're better than their parents and their friends, and we'll be able to encourage them in certain directions based on their learning skills and all kinds of stuff.
Yeah, I've some pretty strong views on this. The education system as it's currently structured is largely designed to educate people to bring them up to productive capacity,
Right,
right? We are all, pieces of the production,
right.
system.
Hmm.
And Tony Seba's most recent book, it talks about this. In the future, if our own labor is not going to be used as much in the production system because we have autonomous robots and other robotic labor, then our education system needs to change.
Right.
We don't need to make people, productive cogs in that system anymore, right? And so there's going to be an incredible change, I think, that happens in education, and having an AI tutor for each child is a no-brainer, in my opinion, to help them focus on their strengths, but also help them focus on some of their weaknesses.
Hmm. Hmm.
Yeah, in ways that human educators cannot do and don't have the time for.
Exactly. Precisely.
Yeah, that's definitely coming. Um, so this was a tangent. I've got these little cartoons as ways to shift the conversation. So let's talk about regulatory credits.
Oh, okay. Wow.
Over the last 12 months, the reported regulatory credit revenue is at an all-time high for Tesla, 2.9 billion.
Hmm.
Okay. And so for all the Wall Street analysts out there that say this is going away, I'm going to ignore it. Okay, fine. But it's 2.9 billion in revenue. Right. And it seems to have hit this new higher level. Okay. And I'll show you in a minute why there's good reason to think this will continue for at least a while.
Right. I think you're right.
Right. Now, on a cumulative basis, this is actually just since the second quarter of 2018, Tesla has earned more than 11 billion
Hmm.
regulatory credit revenue. And again, versus their CapEx of 50 some billion, 53 billion, I think it was the total.
Hmm. Hmm.
Um, the way I look at that is Tesla has, and you and I have talked about this before, but Tesla takes money that its competition provides them
Right.
and builds out infrastructure that then it uses to compete against said competition.
Right.
And I can't think of any other business in the world where that's the case. And so you can look at that since Q3 of 2018, the competition funding almost a third of Tesla's CapEx.
Yeah. Yeah.
Okay. Or if you want to narrow it down and say they funded the AI infrastructure part and
Right.
then some.
Right.
And actually, I've done that. Well, first of all, here, Alexander said that it's about 12.2 billion in regulatory credits since 2011.
Okay.
And the previous slide numbers for 2000 up to starting in 2018. So you can see here how it's kind of grown over time, and hit kind of new levels. And last year was, a record year by far. Okay. So again, here's one way I look at it is if we say, okay, what's Tesla spend on compute?
Hmm.
The investment in computer equipment, hardware and software is 3 billion. The investment in AI infrastructure is 5.4 billion. It's 8.4 in total, and yet they've received 12.2 billion in Reg Credit revenue.
Right.
So Tesla has their entire compute spend given to them basically for free,
Yeah.
right? And again, no other automaker is spending this money and doing what Tesla's doing with this AI infrastructure. That's pretty unique.
And if we want Stellantis to really feel bad about this, even worse than they already feel about it, because they're probably one of the largest contributors to this fund, if we really want to make them feel bad, Tesla also has one of the highest return on investment credit of any company. So they've taken this money and they've created massive amounts of additional returns and income off of it. So the 12 billion is just a fraction of what it's actually benefited Tesla.
Yeah, and you ain't seen nothing yet in terms of the return on invested capital that Tesla will earn on this money. It's coming.
Yeah.
And there's, again, good reason to believe that this will continue. So this chart here shows in blue that they've received 12.2 billion in Reg Credit revenue
Hmm.
since 2011, and in their 10Q disclosures, they have essentially deferred Reg Credit revenue of about 4.5 billion that
Okay.
they anticipate.
Oh, wow. Okay.
So that's another pretty healthy chunk of money
Very
coming
high.
in. Yeah. Um, and that number has been at that level now for a couple of quarters around that level. So, this well is not drying up yet.
Crazy.
Okay.
Crazy.
Yeah. All right. Henry's portfolio isn't very diversified. A few bonds, but mostly in securities. And I thought that's clever because it's securities that we invest in, but yet it's insecurities that we have.
I see. Yes.
Maybe the balanced portfolio is securities and insecurities. You balance those two. Yeah. So quite clever.
Uh-huh.
All right. Speaking of clever, let's move to Tesla Energy.
Okay.
We've talked about this before, and I track this now on a quarterly basis.
Hmm.
We have reported revenues of now over 11 billion in the last 12 months for Tesla Energy. And you can see that a year ago in the same quarter, it was 6.1 billion.
Okay.
So a pretty healthy increase
Almost double.
in revenue. I think it's like 82% or something like that. Yeah. Now, I came up with a measure that I'm calling indicative revenue.
Okay.
It doesn't exist anywhere in financial theory. I just came up with it out of thin air. What is it? It's the combination of reported revenue plus two other parts. We talked about deferred revenue for regulatory credits. Tesla also has deferred revenue in the energy business.
Right.
And they also have something called unsatisfied performance obligations.
Right.
That's kind of like deferred revenue. And so if I track the changes in deferred revenue and unsatisfied performance obligations and add that to reported revenue, I get indicative revenue.
Okay.
Okay. And so this number, early on was not that much higher. And then suddenly you can see the business changed. They were growing their deferred revenues. And so therefore my indicative revenue number exploded.
Hmm.
And so now we've got a, more than $6 billion difference in the two.
Hmm.
Okay. Um, Here are the numbers on a quarterly basis.
Hmm.
And I'm sorry I didn't put the numbers at the top to make it easier. But the one thing that I'll note here is when on a quarterly basis, when you have a big disparity. So here's one period here where indicative revenue got way ahead of the
Hmm.
reported revenue.
Hmm.
Well, look what happened to reported revenue
The
shortly
next.
thereafter.
Yeah. Yeah.
Okay, so there is a natural sort of catch up here. We've talked about how lumpy this business
Right.
is, and we're just kind of seeing it visually here that indicative revenue is truly that. It's indicative of something to come.
Right.
If indicative revenue is higher than reported, then in the future, it indicates that that reported revenue is going to grow. And it's exactly what we saw. And it kind of reached a new level. And now look at the disparity between the two. So I think it's reasonable to assume that in the next few quarters, we could see another step up in Tesla's revenue from this business. Because again, the indicative revenue is showing us that.
So CERN, is it your understanding that barring really weird situations like something doesn't work, something breaks down, whatever, that in terms of this equipment, in terms of the Megapacks and or the services, that barring some weird thing like that, that these revenues are not just indicative, but they are pretty much baked in. They're going to happen.
I think for the most part, I mean, certainly there can be hiccups and so on, but I would imagine that they plan for that. They track that very closely.
Right.
These battery storage systems are pretty reliable things. They have a useful life of probably 20 plus years. It's you're not driving them on the road; they're parked.
Right.
I've joked that Tesla should call these, stationary vehicles and report them as such. We've gone through those numbers before to help Wall Street understand this business.
Right.
Right.
Okay.
But yeah, I mean, we've got deferred revenue, and that's coming. That's on the books.
Okay.
And then associated with the contracts are these unsatisfied performance obligations.
Right.
These are in contracts. It's not just money that Tesla hopes is going to come.
Right.
It's contractual. And so this unsatisfied performance obligations is becoming very large. And
Okay.
in total now, the deferred revenue and the unsatisfied performance obligations combined is now $12 billion.
Okay, so and I talked about this with Larry on Monday, and there was some confusion in terms of his understanding of it. I think he's changed his mind a couple of times. I know that the accounting that we're getting maybe isn't helping us that much. Do we anticipate that this deferred revenue, this unsatisfied performance obligations, as they are satisfied and or the deferred revenue as it comes in, will come in at the same profit margins, greater profit margins? What do we think in terms of the profitability of these increments?
Yeah, I've always taken a very conservative view on this because accounting principles kind of dictates that.
Okay.
I do not believe that this revenue that you see here is like 100% margin.
Okay.
I think it's similar to the margins that they have on what they're reporting.
All right. Okay.
So I think it's more indicative of future reported revenues at, roughly the same margin.
Mm-hmm.
Now, as this business scales, maybe there's some margin upside, and I think we're seeing that a little bit.
Mm-hmm.
But that remains to be seen. But yeah, I don't. It's never been my understanding or expectation that this is massively higher margin revenue.
Right.
As much as I want that to be the case, I don't believe it to be true.
Okay.
Yeah.
All right.
Now I'm happy to be proven wrong on that.
Right, but it is significant. And I'm gonna just go out on a limb here and say no offense, Gary Black, but I don't think Gary Black is paying any attention to this. I don't think that the average Wall Street company, even some of the ones that are the more not only sophisticated but the more bullish, like Dan Ives and whatnot, I don't think they're paying any attention to this at all.
No. And this is clearly a rapidly growing business. This chart again shows the current balances. This chart shows the quarterly changes in those components. And this unsatisfied performance obligations number is huge.
Right.
Right. So in a combination with deferred revenue, 3 billion in one quarter.
Yeah.
Right. And again, I remind you, the last time we had such a big bump in Q4 of 2023, look what happened to the revenues in the following two quarters.
Right.
Right. And so now we have Shanghai coming online. Maybe there's a bunch of contracts signed. And boom, you get a bump. But we're not booking any of that revenue yet.
Right. In fact, there was 100 megawatts shipped out that didn't even show up in the sales. Yeah.
Probably not. Probably not yet. Yeah.
No, they said it wasn't in sales.
Yeah, that's right. So the lumpiness of this business makes it hard to analyze and understand. But zoom out a bit, look at the trends. The trend is very favorable here. The whole battery storage market globally, I think is set to be very strong. And the nice thing about this business is it's not driven by consumer demand. You don't have to worry about brand damage,
Yeah.
right? You don't have the same issues. It's a nice sort of hedge against some of the issues that we talk about day to day.
Okay, so here's another question. If we are only seeing a portion, okay, so one of the things we try to do with these megapacks is we're trying to put an ASP on them.
Yeah.
And so if we have all of this revenue that is not realized, the ASPs that we're putting on them might be a fraction of the actual ASP.
That's right.
So we're not really getting a clear idea. Now
No.
there are websites, I believe. I've never done this, and maybe I should. There's a website where you can purchase these, which is, I think, kind of like purchasing a car. You could just
Mhm.
go in and say, I want one, or I want 150 of them. And that they give some kind of pricing there. Have you ever had an opportunity to try that or see what they're
Yeah,
saying?
no, I've done that. I've looked at that. I haven't done that on a regular, consistent basis and marked it down. But yeah, it's just like going in and buying a Tesla vehicle. You can go in and see that. Um, and so it's very transparent in that way. It's really great. Um, but
I
yeah,
wonder how that's,
it'd
I wonder
be
how that's comparing to the ASPs. What I'm asking is whether the current pricing that it's showing is any kind of reflection at all
yeah.
of the average selling price when we divide the number of units or the amount of units that have been sent out versus the total number of dollars of revenue realized.
You know what, Randy? Let me look at that and I'll report back to you next week.
Okay. All right.
Yeah, because I do track the average selling price on Megapacks,
Hmm.
and so it'd be easy for me to cross-reference that with what we're seeing on the website.
Yeah, because
Yep.
because one of the things that I've paid attention to from the very beginning on this, when we were first doing back of the napkin math on the energy business, in fact, on all these businesses, was what is it really going to be? What's the price going to be 5 years from now? Because all of these, per Tony Seba and others, as we make more and more and more of this, the price is coming down, down, down,
Yep.
where we were at $1 million per regular mega pack. More recently, that number seems to be, well under that. And my projections are that it might be as low as 500,000 by the end of the decade. But if we know what the price is on the website and we know what we're seeing here,
Mhm.
we might start to get a better idea of how to project that number into the future.
Yeah, I'll take a look at that. Yeah, that's interesting. The other thing, the final thing on this is for the unsatisfied performance obligations, we have both short-term and long-term.
Hmm.
So
Okay.
Tesla tells us how much of that
Oh,
balance,
oh,
well, this balance here, this
yes,
basically it's 10 billion in unsatisfied performance obligations.
right.
How much of that, actually, you can see it right here, 10 billion. How much of that is long-term in pink
Ah,
versus the short-term in the
ah,
purple here, fuchsia? So it's about 50-50 right now.
ah,
So this amount here, which is about $5 billion,
right.
a little bit less, is expected to be recognized as revenue in the next 12 months,
Okay.
within the next 12 months.
Okay.
Now, they had a similar number last quarter. So
Sure.
you can imagine a bucket. You've got some
Right.
money coming in
Right.
that's going to be recognized 12 months
Right.
from now, and then some that's being recognized right now.
Exactly.
So the level of that bucket, changes, but you can see it's growing pretty nicely over time.
Yeah.
Now, the big thing here is this longer term bucket now is way bigger than it ever used
Yeah.
to be,
Way bigger. Yeah.
right?
Yep.
Now, it might mean that they took a whole bunch of orders and, it's long term because they can't satisfy this
Yeah.
until a year or two in some markets. So we'll have to see how this plays out, but at least I think this gives us a really nice indication. The difference between these two numbers here, I'll flip back to this chart. The difference in what's reported
Yeah.
and what I'm calling indicative, I think, is a really nice sort of directional indicator for us.
Yeah.
Not so helpful quarter to quarter, but just longer term.
And then, of course, we have no revenue at all from Shanghai here. So roughly speaking, we could be looking at a doubling over the next 12 months. And
Yeah.
then we'd have obviously no revenue from a building that's just now being finished, which is expected to be in Texas, which is supposed to be making Megapacks by the end of the year. So we could be looking at another 50% increase in 2026 compared to 2025. So I mean, it's a very, very rapidly expanding in total dollars, plus this other revenue that's going to be sitting in a bucket, as you say.
Yeah. Now, this is interesting, and I just sort of observed this now, and this is really rough, that the reported revenue over the last 12 months of 11 billion, we were indicating that number a year ago.
Oh, okay.
So the indicative revenue
Oh,
might have a yearish lag,
wow. Wow. Huh.
right? Here's 10 billion,
Yeah, yeah,
10 billion.
yeah.
Here's 8.4. A year before it was like 8,
Huh.
right? It seems to be about a year or so.
Huh.
So a year from now in Q1 2026, we might be looking at 17.5
There you
billion-ish
go. Yeah.
in
Which
revenue.
makes sense in terms of the growth. Yeah.
Maybe, and again, there's all kinds of moving parts here, but
Right.
that seems to be kind of what I'm seeing just from these numbers if we eyeball it in that way. So if we're projecting then what Q2 of this year is going to be, it could be close to 13 billion.
Yeah.
Sorry, these are trailing 12 months, so we'd have to back out what the
Okay.
quarterly number is.
Okay.
But the trailing 12-month number in Q2, looking back, could be something like 13 if this is anywhere near indicative. It's very presumptuous of me to call it indicative revenue. We don't know if it is or not, but it seems to be. Yeah.
And
And again,
then,
based on hard numbers. Again, these are numbers that Tesla's giving us on their 10Qs and 10Ks.
yeah, yeah, yeah. Yeah. And then there's another growing amount. I guess it's probably really not much of a needle mover, but there's a growing amount of internal um, uh, uh, um, sales and because Tesla's buying more and more of these megapacks for their own use.
That's right.
They just put like what was it, about 48 of them or something down in Texas?
Yeah,
I
it's quite
mean,
a
just
few
like
there
like right now, they're putting them in
right
like
now. Yeah, they've been installing the last couple of weeks.
right, and they're putting in a bunch of them in a new charging center that they're just opening a very large charging center that's going to have the solar and the batteries right from the get-go.
And that's another example, like we were talking about with the vehicles. If you have your own internal customer,
Right.
you can just have the factory producing at whatever
Yeah.
is the ideal production level, and you just take the surplus.
Right.
If there's any, in the case of Tesla Energy, there
Yes.
isn't a surplus, there's a backlog.
Yes.
Yeah,
Yeah. In fact, at this point, you're taking them away from a paying customer.
right. Yeah. They may be worth more to Tesla than it is just to sell them to somebody else. All right, here's another great cartoon, but it's great fun when he bounces. So befriend the bear, Randy. Befriend the bear.
Befriend the bear.
All right, and then finally, we've got this chart. Fund managers haven't been this bearish on U.S. assets in 30
Yeah.
years.
Yeah.
I call this a contra indicator.
Oh, absolutely. Now that was
Yeah,
a week ago,
yeah.
and we've recovered 10% since then.
There you go.
That's right.
So I'm here to report to you that was a good indicator. Yeah.
All right.
It's
So
funny because
go ahead.
Wall Street likes to assume that retail investors are stupid, but I'm not sure that institutional investors are any smarter when it comes to this stuff.
All right. Well, that makes me ask you the question about gold. So when gold was at 3,500, I said, sell, 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 sell. That's not investment advice. I turned out to be clairvoyant because it's now 3,300, where this is again being recorded Thursday afternoon. But gold on Thursday afternoon ended up up a little, up 58 for the day, so 33.52, but still way below 3,500. So what do you think, Cern? Just in general, not investment advice. Do you think like I'm just going to say I think gold is done. I think 3,500. It'll probably go back up and try to hit that again or whatever. But I think that's way over its skis. I think it's all done. Other people are saying it's going to 5,000. Do you have an opinion?
Well, I'll leave the tea leaf reading to you and others, but my opinion is more long term, and I'll leave you with something to think about. We are about to be hit with one of the biggest deflationary forces that humanity's ever seen,
The AI.
AI.
Mhm.
Whether it's just in your phone or computer, or whether it's a humanoid robot or a vehicle that doesn't have a driver. Massive, massive deflation is going to come about from this.
Right.
If you are a government that is heavily indebted, do you know any governments that might be heavily indebted?
Oh, all of them?
All of them. You do not want deflation, even the good kind, because paying off that debt becomes a bit of a problem, right? So there's going to be a natural impetus for governments to print more money,
Mm,
right? Because they're going to have to. Also, it kind of coincides with the interesting reality that if AI puts, well, not if, when AI puts people out of work,
right.
they need money. So you're solving two problems with one solution. Print the money because people need it, and print the money because you got to pay off your debt with
Right.
money that's not, too costly. So yes, so back to your gold question, something like that is supply constrained suddenly has more value. So long-term gold actually could be quite valuable,
Hmm.
as is another asset that you and I have talked about that is
I wouldn't know
constrained
what you're thinking of.
by supply,
Something,
right?
a bit in it.
Something's got a bit in it. Yeah. So that's what's coming, I think, longer term. And so in the near term, I don't know whether gold has peaked or not, but longer term, scarce assets will have tremendous value. And they may have more value than they do today because they're going to be even more scarce because everything else will be so abundant, right? Like, let's say today we've got 1,000 different assets that are scarce.
Mhm.
Well, let's say in the future only 100 different assets are scarce.
There's, yeah,
So the scarcity premium for those assets is going to be even higher,
right. Yep, 100%. Oh man, you're
right?
like the only other guy I know that knows this. I mean, nobody else talks about it. Why is the price of housing so expensive today?
Yeah,
It's because everything else in your budget costs less than it did 50 years ago.
that's right.
So then you have more money to bid up the price of the
It's
house.
going to soak up the remaining amount of money.
Right.
That's right.
You're the only other person I've ever met that gets it
Yeah.
on this channel. Here you go. Only the
I'm honored, Randy. I'm honored to be, yeah, in that category.
So yeah. So then if in the future we have those as you're saying the 900 things that are now not scarce anymore, the things the concert, the live concert with somebody that we want to see is going to be even a higher ticket than it
Yeah.
is.
I mean, let's make it really obvious. Let's say there's only one thing in the future that's scarce.
Right, right,
What's the value of that one thing? Well, it's pretty close to all the money in the world,
right. Yes.
right? I mean,
Yeah,
that's simple math,
yeah, exactly, exactly.
right?
So I know we're gonna be running out of time here in a second, but that raises this other question. Does that mean that the sovereign wealth fund that Trump is putting in, this new sovereign wealth fund that we're starting to create, whether it's Bitcoin, whether it is gold, whether it's land with an extraction license, whether it's companies with stocks of U.S. companies that go into this sovereign wealth fund, and whether it's supporting Social Security or whether it's just general, does that become a very important thing to do in that future that you're talking about?
I think so for a number of reasons. Um, Again, I think some assets are more important to put in there than others.
Mhm, mhm.
I see room, for different assets. I think that's fine. Um, I know in particular, some people argue that, well, it should just be Bitcoin.
Yeah,
Fine, but there's probably other assets too that are important. Yeah, no, I think it does become critical because again, the scarcity premium is only going to increase on certain assets,
right,
and other assets are essentially going to be so abundant that they're basically worthless.
right.
Right? How much do you pay for a pile of dirt? Not much, right? Pile, dump truck load of sand. Basically, the cost of the sand is the transportation cost, pretty much,
Right.
almost.
Yep.
Right. And so that's the situation that we're going to find ourselves in with more and more and more things that are going to become so cheap. And so then all the money has to go somewhere, right? And it's like sponges that's going to soak up the things that are scarce, are going to soak up everything else. Yeah.
And for people who think that Cern and I are just talking out of our hats, because that's what I do a lot. And so you're like, what are you guys even talking about? How can you guys even think that that's going to happen? You just have to think. If most of the people that watch this channel are 55 to 75-year-old men, mostly Americans, but it's true the world around. I spent one time $1,000 on a 1 hour phone call between Germany and the United States.
Yeah.
That is free today. That is free today. Not $1,000. It's free. This thing
And where did that $1,000 go that you would spend today on it? Something else, right?
into travel or into a nicer car or whatever
Yeah.
it is. Yes. But I'm just saying the reality of something becoming way, 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 way less expensive
Yeah.
down to the point of being free. Phone calls are free, information is free. I can't tell you the number of hours, I'm sure you did too, the number of hours I spent in libraries to write my books. I've spent a minute in a library in the last 20 years, and I've written 7 books in that period of time. So
Right.
you have massive, massive shifts in the values of things down to zero. And I think people are, Richard Nixon said in the 1960s that nuclear energy would make the cost of electricity too cheap to meter.
Yeah.
If we had gone with nuclear, this would probably already be true. But now with nuclear combined with solar, et cetera, we're probably just a few years away, maybe 6, 7 years away from all energy or energy basically being free.
That's right. And the implications of this are profound, actually. And we don't have enough time to discuss it all today. I'll leave you with this thought. People are aware of supply and demand curves. For a certain level of demand, a certain level of supply, that sets the price. The intersection of the curve sets the price.
Right.
If you have a situation where something is so abundant, where at any level of demand, you have basically infinite supply,
Mhm.
then the price is zero.
Mhm. Mhm.
It's free, basically.
Mhm.
We're going to have more and more goods and services that will approach that point where they become so abundant, the cost of them comes down, trends towards zero. In
Right.
some cases, like
Become
you said, electricity may be free one day.
right.
Likewise, if you have a scarcity of something, therefore short supply, oceanfront houses, for example,
Mhm.
just making one up.
Right.
If demand goes up, then the price of that goes through the roof.
Right.
It's the exact opposite of what I just talked about. So whatever is going to be scarce, we're going to see the prices of those things go up more than you can imagine
Mhm. Mhm.
in a world where everything else becomes dirt cheap.
Right.
And this is going to happen at a scale and across so many different things. It's going to be staggering once we get into this AI-powered world. And Tesla's robotaxi event in June is kind of the first little step in this.
Mhm. Mhm. Mhm.
AI agents on your device, on your phones and computers is another step.
Yep.
Humanoid robots is another one. Start adding all this together and the world suddenly changes,
Terrific.
probably in a decade.
Yep. Yep. Yep.
Yeah.
All right, Cern Basher, I'm hoping that we have been able to give people economics. We've been able to give them Tesla. We've been able to give them philosophy. We've been able to give them futurism. I mean, where else can you
They're all
get?
scared out of their minds now, Randy. Yeah, we're going to have to help them out.
Let us know in the comments below what you think about this postulation, this postulating, I don't know, that we've been doing here. My English professor wife would not like me blowing whatever tense that was or something. Um,
That's the great thing about English is you can say any word you want and it's okay.
Shakespeare did. He just made them up.
Make it up.
That's right. That's right. All right, Cern, as always, thank you so much for coming and helping me do whatever it was that we just did. And to all of you out there, it's been great talking to you.
Thanks, Randy.